Okay, here's the questions. Shawn, what's your view on individual change on somebody changing the title to an LLC on a property? So basically, they get a loan with you in their name, and then they change it to an LLC that owns the property, but the loan's in your name. Would your bank enforce the due on change of title clause?
Well, pretty much that's an open story, but the positive news is Fannie Mae just recently changed their guidelines in the last 12 to 18 months that basically after you close, you cannot get residential financing and close in the name of an LLC or in the title of an LLC. Fannie Mae just recently approved that if you request to have the title transferred after closing, basically you can go through a process through the lender, which would be, in our case, Chemical TCF, and pretty much we'll ask for a copy of the LLC docs. So what that means is if you're one person on the loan trying to transfer to a single member LLC, Chemical Bank has no problem with that. So if there's two members on the loan trying to go into a two-member LLC, Chemical Bank does not have a problem with that. It comes down to when you're trying to do two members on a loan going into a single member LLC, all the parties don't match. So as I educate customers, if you do transfer it without the bank's approval, you are at risk of the due on sale clause in the mortgage, which is the same for every lender. This gets tricky also when we're dealing with people that pay cash or do a hard money loan and they put straight into the LLC. As long as the same people that purchased the property up front, the same members on the LLC, we can transfer it out of the LLC during the process so that they can get a cash out. But again, the members of the LLC have to match the members on the loan in order to avoid the 6-month seasoning period to do a cash out refinance.
That's amazing. When was that change made?
It was made about 15 months ago, about end of 2019, I believe, or 2018.
Well, I sure feel behind the 8 ball. Yeah, I can't believe I didn't know that. That's good. All right. We should have been having you on these webinars more regularly. Is it possible? Is it possible right now to get a very accurate estimate of how an appraisal would come in? I'm thinking for refinancing purposes, and if it's advantageous to refinance or not. So, do you think that do you think values would be high enough to be able to do that appraisal and get the refi?
Every market's different. So for the person asking the question, I would recommend you deal with your local turnkey provider or real estate agents and find out what the values are. And basically, if you can leverage your houses today and get as much money out of the properties today that you can, the rates are historically all-time low. You want to pretty much be leveraging the money, maybe put money in the market or to buy more real estate. So yes, if you have equity in your property, these are the times to get it out while rates are at historical low levels, is my opinion.
Yeah, it's my opinion too. If you can refi, get cash out, have cash on hand, it's always better than cash tied up that you can't get to as quickly. Again, especially at these low rates. And you're basically getting comps from a month ago, right? So seems like it wouldn't be that different right now. I mean, how far back do you go on comps?
They can go to 3 to 6 months. And in unusual areas, you can go back as much as 12 months is the ideal time frame.
So it just wouldn't be that affected right now. That's kind of what's great about real estate is it's very slow moving, not like the stock market that can change in a morning.
And a lot of times, I'm going to add a little bit to that as far as appraisals. So if you're doing no cash out refinances where a exterior appraisal can be avoided or interior can be avoided, my recommendation to the turnkey providers, to the investors that hold the property, have a scope of work all put together, because if you basically decked out a house inside, we do an exterior only, the appraiser can't see what's on the inside. So if you do get lucky and you are doing an exterior only, make sure you have as much information to share with the appraisal as possible, so he's getting a full picture of the property.
Yeah, because these homes have been fixed up and you need to get that value out of it. Okay, is it possible right now to get a very accurate estimate of how oh wait, no, I already said that. Can you pay off your forbearance close it out after taking 3 months off and qualify for a purchase loan if you have a 790 FICO and great debt to
Yeah.
income ratios.
If you qualify, if you've done your proper things and went through your lender for the forbearance, basically it should not be affecting your credit because basically it's a natural disaster. So you should not have any problems proceeding forward to get a house is the information I've heard.
But not every lender is the same. Talk to your
Correct.
lender. All right. Can you pay off your forbearance from your rental properties and qualify for a new purchase considering your credit is excellent, low debt? Yeah, we just said that, to buy a new home. Yep.
Yeah, you should be able to qualify. And again, those guidelines are just coming out yesterday and today. So all lenders are out there talking about them and interpreting them. But again, if you've done the forbearance, it's not supposed to hit your credit report. Whereas 6 months ago, if you did do a loan modification for whatever reason, that would put you in timeout for 2 years. But a natural disaster, it's supposed to keep you out of timeout. So you should be able to continue to purchase, is my understanding.
Okay. If you have a business license for your property, but it is not in an LLC, do you qualify for the SBA loan?
If it's not in the business, I don't think you would, but that would be that would probably be a lender's interpretation, and everybody's going to be slightly different. But again, if it's not in the business's name, I don't think you would, but you might be better able to answer that question.
No, I wouldn't. I wasn't sure if if those business loans worked for, sole proprietorships. So.
But that person's asking the question, they own a real estate, but it's not in the name of a business?
Yeah, if you have a business license for your property, but it is not held in an LLC, could you still get the EIDL?
You probably could get it for the business license, but not, that's two different questions, and I don't have the correct answer for you on that.
I guess you'd have to just apply and see. Never hurts to apply.
Correct.
Yep, we just got ours, and it was $1,000 per employee. So up to, but not fully, just up to the, So that was, we were hoping for more. Basically, that's not going to get us very far with our team. All right, if I cash out refi, can I use the money to buy a new primary house right away?
Most definitely. There is no seasoning period as long as you're getting the asset from a secured asset. So actually, you can do it from a car because that's a secured asset. You can do it from a home. So yes, you can get cash out to buy another property without seasoning.
Okay. Could you repeat what Shawn said? Oh, I don't remember what I said. Sorry. I don't understand that question. It says U.S. Bank, non-owner, percent down, SFR only. Peter, I'm not sure your question. Sorry. Do you do non-government backed lending? Are those interest rates higher?
We do not do the non-QM investment lending, and the banks that were doing the non-QM are not doing them at this point that I'm aware of. You might find some small community banks out there doing them, but as a lender, we just follow agency guidelines, so Fannie Freddie guidelines. But the lenders out there that were doing the non-QM stuff, I believe they're not doing them at this point.
Are you guys doing jumbo?
Yes. Basically, we have no restrictions on our jumbo. Actually, we have doctor loans up to 100% financing up to $1 million. We have a private banking loan, which is basically sort of like a doctor program with income and asset restrictions. That's goes up as 10% down. Once you go over $1 million, then basically the down payments increase a little bit. But yes, we're still doing jumbo lending.
How high do you go up to in a jumbo?
Every situation is different. Definitely, we can go up to 1.5 to 2, but after that, then we just got to get upper management approvals. And it's a case-by-case situation.
I ask because I know we have a lot of listeners in California who have expensive homes. Do you do non-government? Yeah, I already asked that. Okay. And so you will help people with the EIDL or just the PPP loan?
Actually, I don't handle either one of them. I'm just handling the mortgage lending, but I can refer any individuals to a corporate website in order to apply online or apply or speak to somebody individually to get that. But again, if you haven't applied already, there's already a waiting list and the funds are gone.
Yeah. Until there's new funds, you're wasting your time. We were one of the first to apply and we're not sure we're getting it. So, all right. Can you please comment on construction loans for residential development and converting to permanent financing? I mean, is there any construction loan financing out there that you know of?
Do you think that's for primary residence or for investment lending?
It says residential development, so I'm not sure.
Okay, so I mean, basically, the construction lending pretty much, I've heard most lenders have already put a hold on that. There's too many people involved in do a construction loan, and with the stay at home, with the closures, I mean, you have too many involved that would create many delays for the bank. With investment property lending, if that's the case, you really don't have a construction loan for investment properties. It's more most times we do one, the borrower's putting a significant down payment. The seller or the turnkey providers handling the financing of construction, and basically they get their loan when the house is 100% complete. They just get a normal end loan.
So it seems like there will be less building as a result of that, and that will kind of exacerbate this problem of lack of housing that we've had. I mean, obviously there will be not as many household formations and possibly the reverse of that, but we still had such a lack of inventory, and builders were just getting up and running, and now their construction loans are pulled. So it is interesting. That's why it seems like on the affordable level, where there was already such a lack of supply, and now builders just don't have access to loans. You know, I just don't see the kind of the same housing fallout, not in the affordable range. Maybe in properties over $800,000, since it's very difficult to get a jumbo. I can't believe you guys are doing it, but so many banks aren't. Just seems
Correct.
like the fallout would be more on the higher end. I mean, what are your thoughts on that?
I would have to agree. I mean, construction lending was basically going to be a big part of the business this year, just based on the information you shared. I mean, but even the state of Michigan, they made builders non-essential. Realtors in Michigan are non-essential. So even if you were a builder in Michigan, you're not allowed to be building. So at the end of the day, our lenders, I don't believe lenders are pulling construction lending from the books. They're just putting it on hold until we get through the COVID situation, the coronavirus. So again, everybody's getting all up in arms about being put on hold by all lenders, but I think again, it's just like a timeout. Once we get the industry, the economy back in line and the industry figured out with the COVID-19, it'll come back full strength, in my opinion.
It's a great perspective. Thank you. It's always good to hear good news these days. Any good news goes a long way. How many points do you charge on a $500,000 loan? I imagine it totally depends on the situation.
The answer they want to hear is 0, which I could do that too. It just depends on the, is it a primary, is it investment property, is it a 720 credit score, is it a 620 credit score? So there's a lot of characteristics that go into it, but they're welcome to email me or call me after this presentation and explain your situation. I can share, but you can do 0 points or you can pay points to buy your rate lower.
Yep. So generally, if you pay no points, you get a slightly higher interest rate, right?
Correct.
Slightly lower if you pay. Yep. So it just depends to me. It depends on how long you're going to hold the loan. If you're going to hold it for a long time, you probably want the lower interest rate. But pay points.
We can help customers do. We can help customers do break-even analysis. I mean, in my opinion, when you're doing a primary residence, you're already at rates at 3 1/8, 3 1/4, 3 1/2. Most people are not paying points. In the investment world, we are seeing a bigger spread for points. Like maybe 1 point will get your rate in mid 3s with 25% down. So every situation is different, and we always help the client do a break-even analysis that they can make a decision that works best for their portfolio.
I love that. Yeah, you've always been great and transparent about that. Okay, how long do you have to work to be able to qualify for a loan? I have not worked for a couple of years, but have a job lined up once this shelter in place is over.
And if there's a person just graduating out of school, basically we get a copy of the degree. There is no waiting period. If it's a person that say we just got to prove a history or a letter of explanation, say it was a stay-at-home parent, and now they're just re-entering the workforce, we can probably get away with them starting their new job without having a 2-year history. If it's somebody that just said, hey, I traveled the world for 2 years and I've worked in the past 2 years, they will probably have a problem until they establish a little bit of timeline, but each situation is slightly different.
So you don't necessarily have to have that 2-year job history then, but
Not necessarily, but you have to be able to explain what you've been doing for the previous 2 years and have it make
okay.
sense.
Okay. Good to know about college students though. Okay. What is the smallest or lowest loan you can do?
Chemical Bank does not have a minimum loan size, nor do they have a maximum loan size. So I would say once you start getting below 35, 40,000, you start running the federal regulations as far as the percentage of closing cost to loan size. But at this point, we don't have a minimum loan size where most lenders out there do.
Yeah, that's amazing. That's one of the reasons we work with you, because some of our purchases were like $60,000 purchase, so pretty small loan. What typically, let's see, for the typical person, investor through RealWealth, what would be the investor rate today on, say, a $100,000 property?
That's a wild question. It's because again, it's changing every day. But again, if you're doing 20% down, you're probably looking at rates around 5.25%. But if you were to pay a point, you might see rates down to 4.5%. So the points are playing a big factor. If it's a 25% down and you got excellent credit scores, you're looking at rates in the low to mid 4% range. That's with 0 points. Then by the time you pay a point, you might be in the 3% range.
Wow.
So again, the rates are still very attractive out there. But again, every situation is different. It depends on the credit scores.
All right. I'll be calling you. Finally. Let's see. If a married couple borrower has conforming loans with both names, can they cash out refinance into a loan with a single name, income based solely on Schedule E income?
Schedule E would be their personal business. So every situation is different. Again, the individual would have to qualify for their portion of the income. So if it's Schedule C, we got to figure out whose Schedule C income it is. So if it's, let's just say the husband's Schedule E income, but the wife wants to qualify, but she's not on the LLC docs or the business, then we can't use any income for the person not on the LLC docs or the business. So it depends on whose name's on the business at that stage. So again, that would be a isolated situation, or that we have to look at it case by case.
But ideally, both spouses would be on the LLC docs?
More than likely, yes. And if that's the case, then you can only use 50% of the income.
Oh, okay.
But part of our situation is, as a mortgage consultant, is because each one person can only have a total of 10 finance properties. That's where we kind of try to educate the borrowers on why it would be best to maybe put it in one person's name if you can get them to qualify, just to maximize the number of slots an individual can have.
Interesting. Okay, good questions. What is your advice on acquiring a rental house? Should we wait till things stabilize, or is it safe? Boy, that's a loaded question, right?
If we're providing a mortgage, it's got to be safe. So basically, the bank's going to partner with you to buy that house. So rates, again, historical lows, and Kathy can probably answer this question better, is from some of the turnkey providers that I've seen, the rental applications are increasing and dramatically. Was that a safe statement?
Yeah, a lot of areas.
Applications for rentals. So, I mean, pretty much there's a lot of people out there looking to rent. So is it safe? In my opinion, yes, it's safe. I don't believe this is a blip. I think once we get through the Corona-19, houses, the values will restore, rates are historically low. But again, it's about having the right partners. Once you enter the field of investment lending, and that's where the RealWealth Net comes in, and hopefully that's where TCF and Shawn Huss comes in.
You know, you make such a good point that I hadn't really thought about, that if your bank is willing at this time, with everything going on, to lend 80% of the asset, you must have great confidence in it, knowing that it was only 10, 12 years ago that, banks got really hit hard. So, you guys have learned your lesson. You know what to look for. The underwriting standards are very strict. And yet you're still giving these high LTV loans. I consider, someone putting 80% up is pretty high. So that's just a great way to look at it.
It's funny you say that because I have investors like I'm putting 20% down. Well, for 20% down investments, I almost like putting 3 or 5% on owner occupied. So the 20% down investment might be slightly more risky than 5% down on owner occupied conventional, is how some of the lenders do look at that. So that's why you pay higher rates of interest when you buy rental properties.
But you're not going to give, if you want to buy a business, you're not going to give them 80% of the cost of that business. No. So yeah, that's a really good point. And it's very confusing because a lot of people still have, they feel the pain still of 2008, and yet it's just not the same. Lenders have learned, investors have learned, underwriting has been really tough, really strict for the past 10 years. It's just not the same. And back then in the early 2000s, anyone could buy a property. It was unlimited. You could buy unlimited numbers of investment properties with no money down, and in many cases, money back. So you didn't have to have any skill at all. And now you do. I mean, when you're a lender and you're giving your 5th loan to an investor, you're probably looking at how the properties are performing and is that a factor that plays in it?
Most definitely. You gotta, you're viewing the Schedule E real estate owned if it's all not in LLCs. So you're not only looking at your income, your credit, the assets, you're looking at how the the current portfolio is doing. So the 4 or 5 homes they're doing, if you're seeing somebody, which is not often the case, just writing everything off and not claiming anything, then they're hurting themselves. But again, most people that are trying to build their real estate portfolio, and again, it comes back to having a good partner. They're being taught, hey, make sure you're right, putting your income in, but you're taking your expenses. And again, not shooting yourself in the foot down the road by not properly doing your accounting part.
Fascinating. Okay, well, there is an answer. Do you do pre-qualifications before approvals for investment properties?
We sure do. Highly recommended. So pretty much for those who want to get pre-approved, pre-qualified, you would just go to www.shawnhuss.com. And pretty much most turnkey providers, and I think RealWealth Network has an awesome system. They have their client caregivers that basically will say you need to get pre-approved, pre-qualified before you talk to our affiliates, especially with the industry changes right now. Again, make sure you pick the right partner. I'm seeing people come to me and say, hey, ABC Bank just pulled out, and I was 2 weeks away from closing. Now they need me to start over. So again, making sure you're dealing with banks that are have strong liquidity, are going to be there for you in the end. But again, Kathy can probably attest, having a pre-approved qualified borrower is going to put you at the front of the line as opposed to somebody that's not there unless they're paying cash.
Yeah, it's really wise to not even reach out to the property teams until you're pre-approved because they're so busy. There's 50,000 of us and they usually have a small crew because they're keeping overhead low so they can, spend their time acquiring properties, fixing them and finding tenants and, managing them. So getting that pre-approval, most of them shouldn't really even be talking to you until you have that in place, until you know what you can buy and that you're ready to do it. Just bring any of your general questions to us at RealWealth because we're happy to answer those, and then your qualification to Shawn, and then go to the property teams when you're really ready. Okay, why, if we want to ask for a cash out in a house who doesn't have any mortgage, is more difficult to get approval compared with a refinance?
Well, cash out is a refinance. So pretty much you still have to meet agency guidelines. So you still have to income qualify, you still have to asset qualify, and you still have to have the right credit scores. So it depends on what the situation is. So I'm assuming this person has no income or no job situation. If that's the case, then pretty much we got to see how they're claiming the real estate properties that they own to see if they qualify. So a lot of times people get confused that, hey, I don't have a mortgage, but I don't have a job, but the property pays for itself. Well, most of those people own their house. So what they don't realize is they do have to qualify for the taxes and insurance on the real estate that they own. So basically that handles the front ratio. So again, every situation is different. There are creative measures to get debt to income, but again, it depends on what the person's tax returns look like at that time.
Okay. Let's see. Does property on a personal loan put into a trust? Yeah, is there an impact if you have a personal loan, you put it into a trust?
A personal mortgage? No. Basically, Fannie Mae allows it, and you can actually do that at time of closing. So with a trust, we have trust guidelines. If somebody wanted to put the trust in, the title in the trust, we can do that at time of closing without having to deal with the transfer. There is a checklist that Fannie Mae has out there for trusts. So when the people come to us with a trust, we just ask for a copy of the trust, because not only does the lender have to approve it, but the title company handling the transaction has to look it over and approve it as well.
Okay. Do the interest rates change on like duplexes and fourplexes?
The interest rates are that's a loaded question. The interest rates are the same, but Fannie Mae and Freddie Mac charge 1 point because it's a 2 to 4 family. So technically, yes, the rates are the same, but they charge a point. Then in those situations, we talk to the customer and say, if you increase the rate by this much, it'll get rid of that 1 point for you. So there's just one additional point that has to be dealt with when it's a multifamily.
Okay. Applying for an EIDL loan grant, will it affect credit or affect the closing of a property?
I don't handle that, but I'm pretty sure it does not.
Yeah,
I don't think there's a credit check period, and I don't believe it has anything to do with showing up on a credit report or anything in that nature.
Yeah, but I don't think it's probably too late if you haven't done it. We'll see. If we have a property deed if we put a property into an LLC, do we need to obtain prior approval from the title insurance company in addition to the lender?
No, I would be more focused on the lender. They're the ones holding your loan. We have heard some title companies will say, give me permission from your lender before we do it. But as a borrower with a mortgage, your first approval comes from the lender. And if the lender approves it, the title company should not have any problems with it.
How high will you go up LTV for cash out on rentals?
75% on a 2-family, and 75% on a single family, and it's 70% loan to value on a 2 to 4 family.
Am I able to use the appraisal I got for the hard money loan for the cash out refi?
You are not.
The bank's usually going to do their own.
Correct.
Do you recommend getting a 30-year fixed or a 10-year?
Every situation is different. Every borrower is different. So pretty much, in my opinion, keep your payments low. If you're looking at 30-year fixed rates and they're only a 0.5% difference, I would keep your payments low and give you the flexibility to pay it off early if you desire. Once you get money, once you have an asset in a real estate, it's harder to get it back out. So as you're paying that asset down that quickly under a 10 or 15 year, it's harder to get back out. So usually when people come to me, I'll tell them to do the 30-year and prepay it if they choose to. The difference in rates may be 0.5% or 0.75%. So again, but every situation is different.
Yeah, and these rates are great, so why not lock them in? Is there asset-based lending anymore?
Not for investment property. I'm sorry, there could be, but typically not for the conforming size loans. So on our jumbo product, we have asset-based products, which in conforming, I don't believe there is, but again, could be interpretation of different lenders.
Okay. Is it true that if multiple lenders pull hard credit report within a narrow time frame, that the credit bureau will only view this as one pull?
That's what the industry guidelines are. So if you have 2 or 3 credit pulls from mortgage lending, it's not supposed to affect your credit, which is completely opposite than if you had 3 trade lines such as Home Depot, Lowe's, Walmart. If you had 3 retail cards being pulled, those will affect your credit. But if it's mortgage-related pulls all within the 30-day window, is not supposed to affect your credit.
Do interest rates go up once you're at going above 7 properties?
Nope.
No.
Everything
Good.
stays the same.
Awesome. Does the now allowable title transfer to LLC you mentioned apply to properties that were purchased before Fannie and Freddie made that change?
Yes, but you still have to go to whoever's holding that mortgage. You'll have to reach out to them to get permission to transfer it to the LLC. So whoever your lender is on that loan, you reach out to them and ask for permission. But you should be fine to transfer as long as the lender allows you.
Okay. I hope you got a little bit more time because we got a million questions.
Bring it on. I'm ready.
Fire them off. Okay. Do all FHA loans still have mortgage insurance?
Yes, for the life of the loan. So it doesn't even, for FHA, it doesn't even fall off anymore.
No change in sight for that? No.
Not that I'm aware.
Okay. So to recap, in order to qualify for a new purchase, the forbearance on your rentals have to be paid off or not at the time of the new purchase, assuming everything is perfect, ratios, credit, etc.
I don't believe the forbearance would have to be paid off to purchase another property. It depends on how you handle it. Like I said, chemical gives you 3 options: chemical TCF, a payback, a payment plan, or the modification. But again, from my understanding, if you go with the modification, pretty much it's going to be tagged with a natural disaster, COVID-19. So you should be fine to continue buying properties, is my understanding.
Do you have an opinion on whether or not it's better to do a cash out refi versus a HELOC to get the money out?
Most definitely, it's better to do a cash out refinance, only because not many banks are doing HELOCs on investment properties. So,
Okay.
one, that would be the quick answer. The second answer is, if banks are doing HELOCs, it's usually prime plus 2, prime plus 3, and that's a variable rate of interest. So prime is at the lowest point it's ever going to be at 3.25. But if you can get a fixed rate product at 4.5%, 5%, I would encourage most people to take the fixed rate product and stay away from the HELOCs.
Will you do a cash out or a refi on a small condo in Florida?
So, yes, but condos are a little bit different. So condos, if they meet Fannie Mae, Freddie Mac guidelines. So when we do with condo developments, if over 50% have investors in them, then basically they will not meet agency guidelines.
Okay. Mary said, thank you for doing all these webinars. You are welcome. I'm learning too. This is good for all of us. Trying to make sense of all this. Can you give us a sample of rates today for owner? Well, I think we did that. Owner occupied versus investor. It's going to depend, right?
It's going to depend. I mean, and plus rates are going to be slightly different, whether it's a purchase or whether it's investment property. So many, I should say, chemical bank TCF, we have slightly better rates when it's a purchase transaction, because that's the future of and keeping the housing industry going, is basically keep the purchases moving in the right direction. So, I mean, on investment property, on an owner occupied purchase, assuming excellent credit, 25% down, you're looking at rates at 3 1/8, 3 1/4. That's on owner occupied. If you turned into investment property, depends if you're putting 20 or 30 or 20 or 25% down. Again, Fannie charges, say on 20% down, they'll charge 3.5 points. So usually we take a higher rate to absorb the 3.5 points, or to get to 3 1/4, the customer can pay 3.5 points. If you put 25% down, the points drop to like 2.5%. So again, that's why you'll see investor loans have higher rates of interest due to the points Fannie Mae and Freddie Mac charge, which are industry guidelines.
Okay. I have a 15-year history of keeping my rentals occupied. How can I get a loan based on rental income?
Comes down to your tax returns.
So if his job is his rental properties, if that's the main income, that could potentially be used, that income?
Correct.
Awesome.
Yep.
Oh, can you go to the next screen for your contact? Lots of people asking for that. Unless you don't want to give it out.
No, that's what I'm here for. So again, if you go to www.shawnhuss.com, it has my office line, cell phone, my email address. And you can shoot me emails, give me calls, whatever works best for you guys. But I'm usually pretty responsive on emails and voicemails. Again, I know we have a lot of listeners out there today, so be patient, especially with the volume and the low rates coming in today. But I will get back to each and every one of them.
Yeah, we got a few hundred on the call, so there you'll be busy. All right, and that's Shawn at Shawn Huss, Huss.com. Okay. Um, I have no job but cash in the bank. That's not going to work. Got to have a job, right?
Cash is
Yep.
king. So if you can pay cash for the property, you can buy a property.
But you can't get a loan without that job. Okay, if I already have a loan and may have transferred to an LLC, should I send you the LLC docs? Looks like they have a loan
If
with
I'm the
you.
lender, you should have already got permission. So I would handle that with whoever your service provider is, and
It's you.
make sure it's me. They would probably want to reach out, and we'll put them in touch with the right person.
Perfect. HELOC or cash out refi, I think we already said that. You can do loans on a property that was bought with cash and rehabbed. And then, so yeah, if somebody bought a property, it's been fixed up, now the value is higher. How high would the LTV go if they did a cash out?
Okay, so that's basically going into timing as far as seasoning goes. So that's what we call delayed financing. If you're trying to do it over 6 months, over 180 days, there is no limitation. You can go up to 75% of the appraised value if it's single, and it's 70% if it's a 2 to 4 family. If you're trying to do it prior to 6 months, I know there's different opinions out there. Chemical Bank, TCF, we have called Fannie Mae and Freddie Mac directly to say if somebody was to purchase a property for 30 and put $10,000 rehab into it, can they get more than 30,000? The answer we're getting from Fannie and Freddie is you cannot. So if you're doing it less than 180 days, you can go 75% of the appraised value, not to exceed your original purchase price, plus any closing cost. So that's our interpretation with Fannie Mae and Freddie Mac by calling them directly.
Okay. Now, if you pay off your forbearance, what will it say on your credit report after, let's say, paid forbearance, or does it just not show up?
My opinion, from what I understand, it does not show up.
Yeah, we don't know for sure, but that's what we're hearing.
If you get
Yeah.
approval for forbearance, it's not going to hit your credit at all, is my understanding. It's basically once you get into the modification that they'll make a note on your credit. But again, it's also going to be noted with a natural disaster.
What is your recommendation on primary house purchase around 800,000? Should we wait?
Every market's different, and I would rely on your real estate agent to give you the best answer based on what the market's doing. So again, every market's different, and I would work with your real estate agents to have them make sure that they educate you on what's going on around that specific area.
Yeah, I mean, yeah, every market's different. I don't know that the 800, like let's say you're in California and the conventional loan max is around 740 something. It may not affect $800,000, but it may affect over $1 million because people are going to have to put more down. So yeah, again, it just depends. If you're going to be buying a property to live in, just look at the payment and the fact that you're living somewhere you want to live. It's a little different. Are the rates and qualifying criteria for a cash out refi the same as a purchase? I think we already did that. I think we did that. Which mortgage would have a lower rate? 20% down, 80%, or cash out 80% loan on free and clear property?
For one, if it's a free and clear, you can only go up to 75%. So you can't go to 80%. If it's a primary residence, the rate's cheaper on the primary residence. If it's cash out, you cannot do 80% on investment. So basically you'd be at 75%. So that brings up the good comparison is a purchase residence with 20% down. The rate's going to be about 0.5% better if you put 25% down. So I get that question a lot. So I think I'm interpreting the question that if they do a 75% cash out refinance, the rate's going to fall right in between an 80% purchase and a 75% purchase because they have a cash out fee. So I think I answered that question because I get that question a lot.
This person said, I asked for a refinance on my house that's already paid in total, and the bank told me they're not giving cash out in that situation. Then I asked about my other house that does have a mortgage, and they told me that they could do it. Is it just that bank? Because it sounds like you could do that.
Yeah, I think it's bank by bank right now. So you're seeing many banks change their characteristics.
Yep.
And actually, I spoke with somebody this morning, and they said, I just called my bank, and they said they can't do a loan for $50,000 because of the closing cost to loan size. In my opinion, that person just did not want the lower size loan, or their bank had loan minimums, and that was the polite way to tell them that they couldn't do the loan.
And you can cash out you can do a loan on there's been a few people saying, I have a hard money loan. Can you refi that out? And I would think yes, just depending on the property, right?
Correct. And actually with the hard money loans, we are able to do that in less than 6 months, as long as they're not getting cash out. As long as we're just refinancing the hard money loan, you can do that once the house is fully rehabbed.
Okay.
So we do that quite often.
Okay. All right. There's your contact. Someone said, thank you. So many questions. Questions for Kathy. What is your so what, given this great information? Okay. I will look at it. Well, I'm like, why do we do this? I think that's what it is. I didn't read it all, but we do this. I've been giving free information for 15 years. It's how I started. I am learning so much. I'm asked to be on the news almost very often, and I need to be on top of things and understand it, and it's a lot. So when I give this information, I'm also giving it to myself. So that's one. One of the keys to marketing these days is giving something. So when I'm giving, it helps me build an audience. And then when we find a great deal on a property, I have more people that might be interested in it. So we are brokers. We are licensed in California. We do broker to broker situation with teams. There's about 15 teams that we trust and have worked with for years in different markets that we think are really strong for rental property. And they pay us a broker to broker fee. So we are certainly a for-profit business, and we also do education-based marketing as a service. We love to provide it, and it also ends up being our marketing. So that's why we're able to do as many rental property sales as we do. So I hope that clarifies that. Shawn, we don't make money. There's laws around making money, so we're not making any money from this transaction. Sometimes Shawn will sponsor an event that we do. We're not doing any events, so that's not happening right now, but sometimes he'll come in and pay for the room or pay for the food or something like that, but we can't get paid referral fees from lenders. So he's just doing this for us for the education, but I'm sure he'll get some business from it too. So yeah. Would you recommend holding off on buying investment property while in the middle of buying a primary residence?
Again, every situation is different. Whoever you're getting your mortgage through on the primary, you want to talk to that person first before basically looking into purchasing another property. And for those individuals that go ahead and will pay cash for a property or try to buy one while they're going through with a different lender for a different transaction, it's all going to come to surface. So, excuse me. Basically, we get the closing, and all of a sudden we find out somebody paid cash for a property, and they're like, "What's the big deal? I paid cash." Well, now you got a liability because you got taxes, insurance. So, I would speak to whoever your lender is you're working with before you go do anything during the transaction. If you qualify for it, no big deal, but it might put you to an unqualified situation. So, I would speak to whoever your lender is at that time.
All right, wonderful. We made it through. Amazing. All right, Shawn, thank you so much. We're only 15 minutes over. Thank you all for staying and joining us here. Tomorrow we'll be talking about properties in Tampa, and they've got they get incredible deals there. It's amazing. So I hope that you can check that out. That's a part has been the fastest growing part of the USA between Tampa and Orlando. So we're going to check in and see if that's changing at all, or if they're still getting lots of demand for rent, lots of rental applications like we're seeing in Orlando and Jacksonville and Atlanta and Dallas. I mean, we're seeing, like you said, still business as normal or more, and more quality rental applications. So very interesting. All right, Shawn, thank you. Thank you, everyone. We'll see you tomorrow. Take care. Bye-bye.